1 minute, 5 minute, 15 minute, daily. I backtested all of these time frames going back almost 6 months, and one time frame crushed everything else. And it's not the time frame that you're probably using. When a new trader gets into the market, the first thing they start to wonder is, what is the best time frame to take a trade on? Is it the 1 minute? Is it the 5? Is it the hourly? The simple answer is it really depends on what your overall goal is. Now, when you start falling into that beginner trap of trying to focus on, is it the 1 minute because this person is using it or that person is using it, you're going to pretty much go in circles and you're not going to be able to find the best answer. So in this video, I'm going to help you understand how to properly find the best time frame, what time frame I use, and how it helps me manage my trade so I can hold the winning trades for a long period of time. Now, each time frame is going to have a different goal. Now, the first thing you want to identify is, what is your signal to enter chart? What that means is, what time frame are you going to pay attention to mostly when you're trying to decide if I'm going to go long, if I'm going to go short, and exactly where. That's called a signal to enter. So for me, that's a 5-minute time frame. I rely heavily on that. I do look at the smaller time frame and longer time frame to look for context to help me manage the trade better, sometimes for entries and sometimes to hold those trades. Now, the best time frames that I found that give me the highest win rate and highest success rate are going to be a mixture of 5 and the hourly. Now, don't get me wrong, I do pay attention to the 1 minute and the 15 minute, but that is called multi-time frame analysis. But the two time frames that really bring it home for me are going to be the 5 and the hourly. 5 minute is going to help me start the trade, while the hourly is going to help me make sure to avoid any traps, to make sure I stay in the trade as long as possible, because that is going to give me the highest confirmation that, hey, if that stock keeps breaking out or below this particular level, it is going to continue in that direction, which in return gives me as a trader confidence to hold my trade. Now, I'm gonna break down one of my trades. I have broken this trade down in the past, but this time it's gonna be from a different point of view. Now, I did a trade recap on this particular trade, and a lot of you guys asked me if I could explain how exactly I found this trade and what helped me hold the trade as long as possible. So in today's video, I'm going to break that down for you guys, right? So this trade was that break of range, and we got into a short position. It was roughly around 25 contracts. Total position size was around 40,000. Total return was 103% on this particular trade. Now let's break down, looking at different time frames, what helped me enter this trade, what was the reason behind me holding it as long as it did, right? Now, when you look at the hourly time frame, now keep in mind, I do look at 1 minute and the 15 minute, but it's not something that I focus on throughout the whole trade. It's mainly the hourly and the 5 minute. So if you guys could see on the hourly, first of all, we have a level around that 69.70 level. This is from the previous day holding. Then you also have the 21 EMA, which is something I use on the hourly and the daily, as well as the 50 and 200 simple moving average. So for context, 21 EMA is a short-term trend identifier. It helps us understand when there's a short-term trend towards the upside or downside. Usually when we break out of these lines, it helps us see if we can continue in that direction. So basically what I would be looking for, if there is some sort of confluence is when you have confirmation from two different indicators or two different levels. For example, if you have supply and demand or Fibonacci's, or you have moving average around the same level and it breaks through that level, that gives you the confirmation that, hey, this might actually flush if it's the downside. So in this case, that's going to be the 69.70 level, right? You guys see previous day was held here very well. And we also have that 15-minute range, which is almost setting up very close to that level, right? So basically what we would want now is a break and retest on the smaller time frame to give us an optimal entry. And I'll get to that in a bit. So once we have our levels, we have a 21 EMA and we have a previous day's level right around that 69.70. So what you want to do is you want to draw that out pre-market, and this is going to be one of your main levels to keep an eye on for the downside. I also keep an eye on the upside as well. I don't want to focus too much on that, but I try to make sure that I look at both sides just to get an idea that, hey, if we close outside of this range on the 5 minute, I will go either long or short, just so that I'm not biased. So what we're going to be looking for here is obviously the 15-minute range setup, which is right around that 69.70. We're about 2 points away from there, and we want to see a break and a retest. That would give us a confirmation to go short. Now, going back to this, where we're finding these levels coming in from the 21 EMA and previous days support, that now helps us understand that if the hourly was to close underneath this level, right, this would give us a high probability of a continuation. Added on with this, as I mentioned before, you want to look for confluence. You have confluence of a gap right here from 69.50 going up to 69.65. So that's another confirmation that below this level, there might be a good chance sellers get aggressive. Now, if you're only looking at the 5-minute and you're not paying attention to a wider range of time frames, you're not going to be able to take advantage of these type of trades. Now, the reason why the hourly plays such an important part is because once it closes below this, or once it starts to push below this, now the only thing I have to pay attention to is to make sure we stay under it. Meaning if I'm in the trade already, use that level as my stop loss and then start bringing that stop down. That hourly is going to give you that confidence that, hey, we just broke a major level on a longer time frame. And it's giving us the confirmation to stay in because we have more volume coming in, which brings us to the 5-minute time frame. So let's fast forward to where we actually take the trade to understand the context, which is closer to 950, and we're going to change it to 950. By the way, this is the on demand feature, which kind of is very similar to us just going back in time and putting our trades, our strategy into play to understand how well it works on different time frames, going on a random day. There's also a way that you guys can actually backtest. Now you guys can see we broke out of that 69.70. Right, the hourly is well under that level, and we had that pullback, and this is where I pretty much took the trade for an entry. Now I pay attention to SPY, which helps me see the volume, so I'm also going to add SPY here, 5-minute, just to show you guys in reference to how the volume is showing up, how well the volume is showing up to give us the confirmation for that particular trade. Right, so you guys can see right here we broke out of that range. Right, look at that volume. By the way, SPX doesn't have volume. It doesn't show us the tape, doesn't show us the flow. So SPY is something that I pay attention to. If you trade ES, you could use ES as a reference. It shows volume, it shows level 2 and time and sales, and that should be good enough for you to make the decision when to enter versus when there's more buyers versus sellers. So this is where we started the trade, and on this pullback is where I had my stop loss. Now, once this is below that level, this gives me the confidence that, hey, now we're in the gap. It has a very high chance of continuing here. Keeping in mind these two lines, which is your moving averages, I also want to make sure that we're able to break out of that on the hourly. This isn't a signal for you to close the trade out. You just want to pay attention what happens on the 5-minute on the shorter time frame in terms of volume. Is volume slowing down around that 69.30, right? Is volume getting aggressive around 69.30? Both of these will give you an answer as to what you should do with your particular trade. As you can see here, for an example, we pulled back very aggressively from 69.30 all the way down to 6900, where we have the 21 and the 50. We held there on the longer time frame because the longer time frame is used for swing traders, for people who like to hold trades for a very long time, and they'll look at these as a reference point from where to enter or close their trade. So we as day traders use that as a reference point to help us to see if there's an obstacle coming up that we need to be aware of, or did we just go over an obstacle. In this case, it's going to be this the 21 EMA here. So fast forwarding this a little bit more, we are at 10 a.m. and you guys can see that first hourly candle has closed. That hourly candle closes well outside of that. Now, the second thing we would want to pay attention to, like I mentioned before, is going to be that 69.30, right? 69.30 going back. It was a rejection point also from a few days ago. So breaking of that 69.30, you guys can see that the volume is very, very aggressive. It is giving us that confirmation. And these pullbacks should not scare you at that point because we have a very strong close outside of a particular key level. Now, once you get this far away from your entry point, you should feel much more comfortable once you scale out, right? Now, the longer time frame is also breaking out of another level, which was that 50 SMA, and the 200 SMA is coming up next, right? So if we close outside of this 50 SMA, that is going to give us another confirmation that, hey, we just broke another key level on the longer time frame, which in return gives you confidence to hold the trade on your smaller time frame. These pullbacks are going to be your reference point to where you place your stop losses. Once you start the trade, right, you have your stop right around this level, which is going to be high of that previous rejection point. As we come back, the break and retest of 69.55 becomes your new stop loss. Once this candle breaks out of the two levels that were tested multiple times, in this case it was 69.45. Once we close below, you use that as your stop loss. So the smaller time frame is going to give you your entry. It's going to give you your scale out levels where you should have your stop losses, while the longer time frame, the hourly, is going to give you confidence to hold the trade. And you guys can see here, I actually closed the trade out a little bit early because at this point I saw volume started to dry out, premium started to take a little bit of hit, even though I was in the money. But the confidence to hold a trade came from looking at that longer time frame, breaking those particular key levels. So if you are having struggle trying to figure out what time frame to focus on, start with this. Focus on the 5 and the hourly. Look for combination of patterns forming on the higher time frames, such as the hourly, 4-hour, or the daily. I would try to stick to just the 1-hour chart as the main reference point of patterns, and then come down to 15 and 5 to focus on where you're going to place your stops, where you're going to have an entry point, and what is going to be your next level of stop that you're going to start trailing, right? It becomes much easier when you look for breaks and retests on the 5-minute to manage your trade. If you're not paying attention to the hourly, you're not going to know where there might be some sort of a reversal, or where if the stock breaks out, if it has a higher potential of continuation, you will be leaving a whole lot of profits on the table. I hope this video was helpful. Comment what other topics you guys would like for me to cover. This was a very highly requested video from the previous trade recap because people wanted to know exactly how I jump in and why I take certain trades. So I hope this helps you guys understand better, and I'll see you guys in the next video.